Hey guys, welcome back. In today's video, we are talking about AMC hitting $6, the institutional accumulations, AMC synthetics, and many more in this video. First, we're taking a look at this. Cramer, I want you to sell if it hits $6, so expect price to hit $6-ish before dumping from debt to equity conversion. Then we should see the run as predicted by the algo itself. Just don't be surprised. Expect the FUD and shills. So for those of you who don't know, the context is recently we saw Jim Cramer actually talk about AMC, and he basically said that when you see AMC hit $6, you should sell your shares. Now, as always, obviously we have the reverse Jim Cramer, so it's very likely when we do see it hit $6, we are actually going to be seeing more buy orders come in. But the reason why I want to talk more about this is understanding, what they're trying to do. One of the things, like we talked about, is the debt to equity conversion. It's obviously understanding that AMC at a certain price will have its shares converted, and therefore it will be used to actually pay off the debt, and that itself is a good thing. But what that can have an effect on is, of course, a negative effect in the sense that it could decline the price. Obviously, if we are met with more buyers, if we are still seeing people buying into AMC, that would still increase the price. But we're talking about if nothing happens and we are seeing the shares being converted, it could be likely to see the price go down. But it doesn't mean it's the end of the world. It's a very normal thing, and it is used for a good cause of AMC to pay off these debt. But one of the things that we have to understand is, again, talking about $6, talking about the sell-offs, talking about people buying, is that volume analysis, large institutional participation begun at a certain point in this 3-year range. As the chart fails to create a new lower low due to exhaustion of supply, could there be great things to come for a company that continues to break all-time records? And so, taking a look at the AMC price, now what we have to understand is that AMC continues to see people buying in, and whether that's retail or whether that's institutions. And this isn't something that, we're just using the chart to obviously talk about. There is indicators. We talked about the RSI, we talked about the OBV, we understand the price action, we've seen the order books, but more importantly, we are also seeing the very filings that are reporting institutions that are, of course, buying in. So no matter what areas you're looking at, what you can see is people buying into AMC, and they aren't just accumulating AMC at the $3 area, at the $4 area, at the $5 or even $6 area, but they have been accumulating AMC all throughout from the all-time high to where we are now. So going back in terms of talking about Jim Cramer saying, I want you to sell if it hits $6, remember, institutions are buying above $6. They would not be selling AMC when it hits $6. Why is Jim Cramer telling the retail investors to actually sell at $6? And I want to show you an example of how they use media articles to obviously create a false effect. You can see it. Corruption. An article published last week indicates that Ken Griffin has sold 91% of their Palantir position. Now, this week, articles are being published telling investors to sell PLTR and that the stock is going to plunge 40%. Let's see if the stock falls or continues to climb with the next couple of weeks. And so what we can obviously see now is how people are saying to sell Palantir. And you can see when a very large institution get rid of their positions and doesn't need the stock to go up anymore, you can suddenly see all these articles that are telling you to sell. And like we talked about, that's because they no longer have an interest. So they don't want Palantir to go up. They obviously want that volume to go somewhere else into the stocks that they've newly bought, and they want to make money off of that. And the same can be applied for AMC and GME. The reason why we're seeing articles to see people to sell their AMC shares is because, one, they want institutions to buy in. Retail holds the float. Everyone knows that. We know that. This is something that has been set in stone. This is something that has been talked about for the past 3 years. And what we have to understand is that institutions want to buy the real shares, therefore they want retail to sell, and that's why we see these articles. Another thing to understand is obviously because they want people to sell because they understand that the retail investors want to bankrupt the hedge funds, they want to short squeeze the hedge fund, and the only way for them to obviously get out of this situation is if every single retail investor were to sell their shares. And that's obviously not going to be the case, but this is what we talked about, how they use media articles to try and benefit their own interest. Like I said, this is for PLTR, but you can see how this applied for AMC, for GME. We've seen multiple articles in the past before. It's just interesting that, again, this is just a common tactics that they use. And another thing is about understanding the fundamentals. So we talked about, how they try to use media articles to obviously get people to sell. But we also talked about how institutions are accumulating. Well, when we take a look at, in terms of the fundamentals, one thing we talked about, just letting you know now, AMC will continue to gain more as better movies roll out. Apes and Publix are making movies at AMC great again. We talked about the recent Thanksgiving box office. We talked about how that has created records and how AMC has record attendance, food and beverage, concession, etc, etc. So AMC is doing very, very well with their business structures. And the power is that what we have is, this is why talking about movies is so important. You get 10 people to go to the movies, then each of them get 5 people talking about it. You just 50x your impact. We have 4 million of us. So obviously, if you're getting people, whether they're in the US or wherever they're outside, there are still, of course, AMC owned subsidiaries. When you do go into these movie theaters, when you go to these chains, you are, of course, helping out AMC. You are improving the fundamentals of AMC. Now, again, if you find a movie that you like, feel free, obviously, to talk to your friend about it. If you can get them to an AMC chain, even better, because that, again, you don't have to, because at the end of the day, if you want to watch a movie, watch it wherever you want. But it's talking about how people like us, we have the power to obviously improve the fundamentals of AMC as well, because we can spread the word about it in terms of talking about, where we are watching movies and where other people could also be watching movies, and that you can understand will obviously help out AMC as they make more revenue. When they make more revenue, they will make more money. With more money, paying off debt, dividends, short squeeze, etc, etc. Something, everything that we've always talked about in the past. Now, let's take a look at the synthetic. So people really don't get it, do they? Look at what Wisdom Tree does. Borrowing and lending tokens to rehypothecate with the DTCC using smart contracts. So we can see test tokens and a use case related to lending and borrowing, where we can see deploy lending and collateral management smart contracts. So this is something that we've seen in the past before. One of the biggest reasons for why we're always seeing the suppression, why we're not seeing the true price discovery of AMC, is obviously because the existence of synthetic shares. Everybody knows that. Everyone understands how they use synthetic shares to obviously suppress the price. And you can see this is what they're doing. We've shown this with AMC, we've shown this with GME. We've even shown over quadrillion tokens of AMC. The ratio to this day obviously still not known in terms of, is it a 1 to 100, is it a 1 to 1, etc, etc. But what we do understand is that they obviously use these to rehypothecate, they use these to create synthetics, and that ultimately is what creates, the 100x floats that we're seeing flying around the market. It's what's keeping the real price discovery of AMC, and it's what's suppressing AMC's price. And you can see these tokenized stock tokens, also called stokens, are coins that are supposed to be redeemable for 1 share of a stock. The actual GME stock is held at a custodial bank, which rehypothecates the share for marginal lending. And this is something that we have seen, where you can see unauthorized GameStop stock has been created. And another thing that you're obviously looking at here is in terms of the crypto derivatives for GME. So we can see from obviously both sides that there are tons being made. Now this is for GME, but I've shown in the past that the same exists for AMC as well. And so going back to this in terms of what is happening, this is what's happening. The lending, the collaterals, the infinite amount of shares being used to obviously short AMC is how they get the price to stay low. And again, the reason why they get the price to stay low, firstly, is get retail investors to obviously sell their shares. Secondly, is to limit AMC from raising money. One of the things we obviously talked about is how AMC does share offering, and what they do is that when you suppress the price, you're obviously limiting how much AMC could be raising with share offering. And when you limit how much they raise, they will then have less capital to pay off debt. They will have less capital to obviously make investments, and that hinders the fundamental progression of AMC. And that's what they try to do, because they understand that retail investors won't sell. So the only other way for them to get out is for AMC to go bankrupt, and that's what they're trying to do. You can see what Bigum said. For people asking me, yes, I believe AMC is still the holy grail, but that doesn't mean I'm not going to look for more buried treasure along the way. The never settled AMC shares just moved them to the dark. Now, the reason why I say this is obviously understanding, that the AMC thesis is still here. As always, know this is ever financial advice, so do take our second of some. We should do your own due diligence and research. But what I'm saying here is understanding the fact that we've seen the very fact that they are creating these tokens means that this is still ongoing. It means that shorts are still trapped. What we also understand is that the reason why this is a long-term play is because AMC is slowly improving their fundamentals. They're slowly progressing as a company, and that ultimately is what's going to allow AMC to grow. And you can also see here the weird glitches that are happening, where when you take a look at AMC, what you can see is actually the price. You can see here go one, and this again is $1.6 billion for a share of AMC. Now, this is obviously a crazy price, but the very fact that we are seeing glitches like this always makes us wonder what is happening. Anyway, guys, thanks for watching this video. I'll catch you guys next time.